2022 has been a tumultuous year for the economy. The stock market has been massively down over the last year, but is it the beginning of a massive market crash, or will we finally see some positive momentum on the market for 2023? And despite the numerous increase of the interest rate over 2022, we haven't saw a real correction in the real estate market. But with the other increase of the interest rates that are predicted for 2023, will we assist to a massive real estate market crash? And treasury bonds are looking pretty interesting at the moment, but will you miss many great opportunities if you decide to go with that? Well, in this video, I will share with you how you can personally prepare yourself for a future recession in 2023, and I will share with you how I personally prepare myself for this brand new year and what are the kind of investment that I'll be making in 2023. I'll also give you my thoughts on what is coming up in the next year and what are my predictions for the market in 2023. However, keep in mind that I don't have any time machine to go see ahead and see what will happen on the market, and it's why no one can predict perfectly what will happen in the future. But first, what makes 2023 way more different compared to 2022 and all the previous years? Well, there are many different things that could make this year very promising for the investors, but at the same time very frightening. First, according to the statistics, over the last 6 months we would have been in a technical recession, which means that we have lived 2 quarters in a row of negative growth in the GDP. And since the economy is predicted to grow in 2024 and 2025 as the Fed has warned us, it could mean that we could become in a depression over the next couple of months and years, which would obviously have a massive impact on the global economy. After, we still have the war in Ukraine, which is causing some massive problems, mainly for the supply chain, and more precisely for the oil and the natural resources for the global planet, but also more precisely for the Europe, because in fact Europe is still massively depending on Russia oil. However, after living under a pandemic for more than 2 years, people still need to consume and spend their money. And in November 2022, we saw that the increase of the average spending household has increased of more than $433 due to the high inflation. In fact, as we can see, the inflation reached its peak of more than 9% in June 2022. And since that time, we can see that with the rise of the interest rates, it has slowly started to go down. But since the Fed has said that the inflation rate in November 2022 was still higher than 7%, well, we are still really far from the target objective of between 1 to 3% by the Fed and the Bank of Canada. And despite the current interest rate of about 4.25% here in Canada, we need to expect that the high inflation will continue to still be there over the next couple of months and maybe over the next couple of years. Unfortunately, in 2022, we've seen that massive layoffs were becoming pretty typical, notably because of the high inflation and the global negative economic conditions, which have caused some massive losses for many different companies. However, the good news is that for the first time here in Canada and in many different places in the world, we could be in a recession throughout a labor shortage environment. This means that despite being a recession where usually businesses are closing, and which also means that people that are working for those businesses are losing their jobs, well, those people that will just lose their job will be able to find another one. Now that I've presented to you a big overlook of what is the current economic situation in the entire world, well, let's see how you can prepare yourself to face 2023. First, knowing that we will still be in a high inflationary period in 2023, you need to understand the power of diversification. In fact, if you can learn one lesson from 2022, it would be to not put all your eggs in one basket. Despite the horrendous performance of less 20% of the overall market, well, there are still some different investments that would be way worse than that. Just look at the crypto market, for example. We've saw that pseudo specialists in 2020, 2021, and at the beginning of 2022 were telling everyone that it was the place to go and that it was actually a great edge against inflation. But in fact, in 2022, if you have decided, for example, to buy some Bitcoin, it would be down of more than 60% over that last year. Diversify yourself means that, for example, you could put a certain part of your liquidity in the crypto, but a biggest part, for example, of your cash could also be invested invest in different ETFs, and another portion could also be invest in bonds, stocks, and also different real estate properties, all while thinking of your own risk assessment. However, if we want to see what have been historically the best investment throughout recessions, first, one of the best investment has always been gold. This has been historically a great investment, especially for different countries that didn't necessarily have a strong currency, because in fact gold could be considered as an alternative currency that is worldwide recognized and that is also physical. However, gold isn't a perfect hedge against inflation because compared, for example, to a dividend stock, well, it isn't paying some dividends to the people that have bought it. But we saw that throughout 2022, the price of gold has pretty much stayed the same. And usually throughout recession times, the price of gold will also increase. After, another great hedge against the inflation can be found in the commodities. In fact, this broad category, which notably includes grain, precious metal, electricity, oil, and foreign currency, has a special relation with inflation. Often commodities are seen as an indicator of the future inflation. This can be super interesting, but however, keep in mind that this is also another sector that is super volatile. It means obviously that throughout inflationary periods, those price of the commodities will obviously increase, but throughout deflationary times, this means also that the price of commodities will decrease. After, to assess your risk, you could obviously opt for the famous 60/40 stocks bonds ETF, and this could be a great way for you to earn some great interest income from the bonds and at the same time to receive some great potential growth from the stocks. And finally, the most interesting way to hedge yourself against the inflation, in my opinion, is the famous real estate. Obviously, one of the big pros from this kind of investment is that it is completely decorrelated from the overall market, meaning that obviously you have slightly more control on it. It is also something that is physical, and at the same time, it is giving you some great monthly cash flow from the different payments of your tenants. It can obviously be a way for you to become rich quickly if you understand how it works, notably with the leverage effect. But keep in mind that it also takes a lot of money to start in this field, and despite all the different guru talks about real estate, it is still very risky with the raise of the interest rates. Because in fact, usually when the rates will increase, it means that the property's value will decrease. And at the same time, if you have a variable rate, it means that you will also pay a lot more interest compared to your capital. And for those that doesn't necessarily have thousands of dollars to invest in real estate, you can simply buy different real estate investment trusts on the stock market. Now, for my personal investments at the moment, if you currently follow my 1 year series on 1 year to beat the stock market performance, well, you know that most of my cash is currently invested in different ETFs and stocks. And 2023 is the year where I aim to buy different physical assets that pay me some great passive income, which obviously will also greatly diversify my overall portfolio. As I've already said, one of my main objectives for this new year is first obviously to buy my first real estate property, but since I've lost one of my jobs at the end of 2022, I have less income at the moment that I'm earning, which also means that I need to have some better and some great liquidity management. So right now I'm trying to save as much money as I possibly can, and eventually throughout 2023, obviously I want to find another job, which will also help me to build my down payment. And after, the plan will still be the same. I will continue to also invest in different ETFs in priority. Because in fact, personally, I prefer to invest in different ETFs compared to stocks and bonds because they are giving me some better diversification and the overall return is often better after a long period compared to the stock picking. Right now, I'd say that I'm saving about 80% of my total income after expenses to invest it eventually in the real estate, and the 20% left is obviously invest in different ETFs and stocks. However, another kind of investment that I am personally doing at the moment is with my business. In fact, at the moment, it represents more a time investment compared to a monetary investment. As you might know, I have been working my ass off lately on the YouTube grind, where I want to use my personal experience as a financial analyst to help people with their different financial journey. And 2023 is going to be a massive year for this channel where I have multiple projects on which I am currently working on. And obviously, if you like this kind of content, you can obviously subscribe to this channel. As 2022 has made us learn, especially us, the youngest investors that haven't lived the 2008 major crash, the market is unpredictable at all time, and it isn't always the best pick to choose the companies that have the highest potential of return, because at the same time, those companies can also be a lot risky. And it's why it's important for you to not put all your eggs in one basket and also to have some great diversification. Patience is another key word to keep in mind when you are investing, because in fact no one can predict what will happen in the future, and so you need to be patient with what are your investments. And if on your side you want to understand how you can save up more money without making any big sacrifices, well, check out the video that's gonna be right over here, and I will see you soon. Peace!